Good morning, friends. I hope you're having a good day. Hey, today we looked at Bitcoin a lot. A big thing that we looked at in the live stream this morning, which if you haven't done already, check it out. There was a lot of good stuff there. But we looked at Bitcoin's stock to flow ratio. And I wanted to take a little bit more of a look at that in depth. This is probably the biggest reason why I am certain that Bitcoin is going to hit six figures this year, that it's going to hit $1 million this decade. And so I want to look at stock to flow. Okay, now stock to flow is something that has existed for a long time. It's not something that's new to Bitcoin. It is a good indicator of where a price is, where a price should be. It analyzes supply and demand and takes a look at how much of an item exists in comparison to its demand. How much potential can that item exist in comparison to its demand? So I want to compare Bitcoin, which is looking very nice today, along with Ethereum and some other altcoins here. I want to compare it to gold and silver. So I want to start off with silver. Here is a historic ahistoric price chart with silver. You can see that it touched $50 an ounce in the early 80s, and then again it got very close to $50 an ounce in 2011, and it was as if there was some kind of barrier there. It went way down throughout the 80s and 90s. I mean, got below $5 an ounce at one point in the 90s, and then shot up again. And now it's around $27 an ounce, which is probably a fair price for silver given the declining value of the dollar over time. But what happened here? What happened in the early 80s? I'd like to talk about that. So you might have already heard of this, I don't know, but there was a couple men, the Hunt brothers, and they attempted to corner the market in silver. And they were billionaires. They attempted to just get as much silver as possible to cause the price to shoot up, and initially they were successful. Price shot up from around $5 an ounce to $50 and then crashed immediately down, and they ended up losing, I think it was around $300 million. So what happened? They gobbled up as much silver as possible, but silver is an item that is readily available. And so all these miners, it's readily available in the Earth's crust. They, instead of mining copper or gold or other things like that, they had an incentive to mine silver. And that's exactly what they did. They mined silver, they increased the supply and made it impossible, and I mean absolutely impossible, for the Hunt brothers to ever dream of being able to corner the market with silver. And that caused the price to collapse. And this is the same thing with anything that you want to use as a store of value. If that thing is to go up in value, there needs to be certain limitations in place. And gold, in comparison to silver, the amount of silver that can be mined each year can add to our current stockpile about 10 to 20% each year. It's a decent store of value, but gold is a much better one, and it always will be. And so let's take a look at the price of gold here. So gold got caught up in the same Hunt brothers shenanigans in the early 80s, and so you see it topped out at $800 an ounce, and then it went back down about $300, got into $300s, and it shot up in value, which is much more indicative of a decreasing value and a decreasing decreasing trust in fiat currency. And so this is not by any means a bubble. It got up to $1,800. Yeah, it went down to a little under $1,100, and then it's back around $1,800, got over $2,000. The price of gold is going to increase. And gold has traditionally been the item that if it increases in value, you're not going to be able to incentivize people enough to increase the supply. And so that's the appeal with gold. That has been the appeal with gold for many, many years, decades, centuries, even millennia, is that the stock to flow, the amount of gold that can be added into the system, is steady, and it stays the same forever. And so here's a chart here. You see this squiggly line. This is how much the annual stockpile growth in gold. And then this light gray line is total gold stockpiles. And so yes, the amount of gold that is being stored in the world since 1900 has increased, but that is a very slow rate of increase. We're talking about anywhere between 1 and 2%, 2.5% increase on an annual basis. I mean, since 1950, we're really between 1 and 2% increase. So that's what has traditionally made gold lucrative, is that no matter how much the demand increases, the supply will always stay the same. And again, the price has increased accordingly, along with the factor of a lack of trust and decreasing value of the US dollar. And so gold has traditionally been a good investment for store value purposes. It's much better than keeping your fiat currency in the bank. Silver is better also than keeping your US dollars or whatever in the bank, but gold is the superior of the two because supply can't increase even if they want to. And so this explains the appeal behind Bitcoin's stock to flow. So let's go to that here. I just want to check this here. Yeah. So what do you know about Bitcoin? I hope by now you know about halvings. And so if you don't know about halvings, every 4 years, about the amount of Bitcoin that can be mined is cut in half. And so in May of 2020, that number was cut in half from 1,800 Bitcoins a day to 900 Bitcoins a day. In 2024, that number is going to go to 450 Bitcoins a day. In 2028, that'll drop to 225 Bitcoins, etc., etc. The last 40 years, so Bitcoin mining will exist until 2140. The last 40 years, only one Bitcoin will be mined, which blows me away. And so demand has increased with Bitcoin over time, and it has become more and more mainstream, more and more adopted, which it's the same thing with gold and silver. What makes it appeal over other things with monetary value, there is a sense where there has to be a belief that this is of value, and then we'll use it as a medium of exchange. Same thing with gold, same thing with silver. This is happening and has happened, and I would say we are at the point with Bitcoin where we are here. We are as far into it as we need to be for the trust in Bitcoin to be a medium of exchange. Now, as institutions, as people are waking up to this fact, what we are seeing is that unlike gold, which increases 1 to 2% every year, the total supply of Bitcoin is increasing at a set rate, and that supply, the increase, is decreasing more and more every year. Every 4 years, I should say. And so what is that doing to the price of Bitcoin, and what's that going to do? Now, somebody who's a lot smarter than I am made this stock to flow model to attempt to predict the price of Bitcoin over the years. Now, this red line is kind of a mean. that is where the price of Bitcoin should relatively stay. You can see historically, sometimes it shot way above it, sometimes it shot way below it, and those have been tremendous buying opportunities, especially early on, November of 2013, December. I think Bitcoin went up to $1,300 a coin. It shot way above this red line, this mean, and then shot down below it. And that's what you can expect in general with the price of Bitcoin, is to shoot above, shoot below, shoot above, shoot below. But you can see from the beginning, this red line, the price of Bitcoin has remained very faithful to it. I mean, even as far back as when, November of 19, January, February, March of 2020, May of 2020, it should have been, according to this model, at $9,300. And then this thing predicted essentially where we would be right now. Let's see, today, my making of this video, today is February 9th. All right, on February 8th, the price of Bitcoin, according to this, should have been around $46,000. And you know what happened yesterday, I think. Well, if you don't, if you're watching this in the future, Elon Musk, Tesla bought $1.5 billion worth of Bitcoin and shot the price up from $39 a coin, $39,000 a coin, up to as much as $48,000. And so we can see that price here. February 9th, $47,079.02 as of this moment. And so we are pretty much right on that line. And so where are we going to be? Where are we going to be according to this stock to flow model? Well, on May 10th of 2021, 3 months from the making of this video, we should be around $83,000. Now we could be way beyond that or not near that at that point, but we will swing back and forth near those prices. And so we could get as high as 200,000, maybe even higher this year. However, where you see this red line going is you see it around 85, 86 until the next cycle, until the next halving, which will put us somewhere around May of 2024. So April of 2024, $97,337. So not much change between May of 2021 and May of 2024. However, there are wild swings. And so we will probably see something similar to what happened in 2017, where the price of Bitcoin shot up to about $20,000. And maybe we'll see it at 200,000. Maybe we'll see it crash down instead of being at 89,000. Maybe we'll see it at 60,000. I don't think so. I think people are starting to get smart to this, to the stock to flow. But here's the thing with Bitcoin that is very exciting when you factor in stock to flow. All right, follow me here. All right. May of 2024, we're starting the upswing. It should be around $100,000 at that time. And then rapid, and I mean rapid growth to June 6th of 2025, $972,829. This is all because of two reasons. One, belief in Bitcoin as a store of value. Just like gold, just like silver, those function because of belief in their values. Bitcoin has the same thing, where belief in it as a store of value gives it relevance. But two, because of the lack of Bitcoin that's being added to it, the lack of an increase in supply will send this price shooting up. And I do expect for Bitcoin to be worth $1 million sometime around the middle of this decade, and who knows about after that. Now, should I say, dare I say, $10 million, dare I say $20, $50 million of Bitcoin, $100 million, maybe more. Satoshi Nakamoto, whoever he is or they are, he foresaw a day when we would see a $10 million Bitcoin. And so this video is for entertainment purposes only. Do your own research before investing your hard-earned money. But with that being said, I think you should buy Bitcoin. All right, that is it. Have a great day. Have a great rest of your week.